Hello financial fans, welcome back to another stock analysis. Today we'll be covering British American Tobacco stock ticker BTI. British American Tobacco is a multinational tobacco company headquartered in London, UK. It is one of the largest tobacco companies in the world with operations in over 180 countries. The main businesses of the British American Tobacco is the production and sale of tobacco products such as cigarettes, cigars and tobacco pouches. The company offers a wide range of brands such as Dunhill, Kent, Lucky Strike, Pall Mall and Rothmans among others. In addition to its tobacco products, BAT also offers a range of next generation products or NGPs, which are alternatives to traditional tobacco products. These NGPs include e-cigarettes, tobacco heating products and oral tobacco products. The company is currently sitting at a market cap of $79.3 billion, and in 2022 they generated a revenue of $34.1 billion, and the dividend yield is currently sitting at a very nice 7.9%. 46% of the revenue is from the United States, 23% is generated from Europe, 16% from Asia Pacific and the Middle East, and the remaining 15% from the Americas. To determine the final valuation of the company, we'll be using a margin of safety. Margin of safety will be based on the financial ratios, the financial health and the growth of the company. I will be using a standard margin of safety of 25%, that can never be below 0%. The margin of safety can either increase or decrease based on the ratios that we're going to look at in just a moment, and the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in a scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction. The first two metrics that we'll be looking at are the EBIT growth and the margin growth. The EBIT has gone up over the year, going from $5.7 billion in 2013 to $11.6 billion in 2022. The average EBIT growth during this period was a nice 9.3%, which doesn't qualify for a margin of safety deduction quite yet. The margin has also increased, going from 37.8% in 2013 to 42.1% in 2022. The average margin increase is 1.4% on average, which is a 5% deduction in the margin of safety. The next two ratios are the dividend growth and the payout ratio. The dividends have gone up over the years, going from $2.16 a share in 2013 to $2.80 a share in 2023. Keep in mind that most of the dividends are paid out in pounds and converted to US dollars. That's why this chart looks relatively odd. But still, the dividend increase on average has been 3% annually, which is no change in the margin of safety on this metric. The payout ratio here is sitting at 53%, meaning no change in the margin of safety once again, since they still have some room left to increase their dividends further. And the final two ratios that we'll be looking at are the debt to EBITDA and return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it and divide it by the EBITDA. Out of this we get the amount of years of EBITDA it takes for the company to pay off all of their debts. And for British American Tobacco this is almost 3 years, in this case a 288% debt to EBITDA ratio, which is no change in the margin of safety on this metric again. And the return on invested capital for British American Tobacco is sitting at 8.1%, which once again does not qualify for margin of safety deduction or increase. Let's go look at the valuation models next to determine the intrinsic value of British American Tobacco. The first valuation model that we'll be using is the discounted cash flow model. I've imported the free cash flow of British American Tobacco going from 2018 to 2022. The average growth rate in their free cash flow annually during this period was minus 0.46%, and I'm projecting an expected decline in their free cash flow of 3% annually over the next 10 years. And with this percentage, we'll be determining the future free cash flow for British American Tobacco and determine the terminal year of valuation using a perpetual growth rate of 3% and a discount rate of 8.5%. This gives us a sum of free cash flow of $142.7 billion, and to get our equity value, we have to add the cash and equivalents and subtract the debt, giving us an equity value of $99.4 billion. Now all we have to do to get our intrinsic value out of this model then, is to divide it by the amount of shares outstanding, giving us a discounted cash flow price per share of $44.37, which is almost a 26% upside from the current price. The second model that we'll be using is the dividend discount model. I've imported the dividend payouts of British American Tobacco, going from 4 years ago to the current year. The average growth rate in the dividends during this period was 3.37%, and I'm projecting expected growth rate in all of their future dividends of 2.5%. I will once again be using a discount rate of 8.5% in this valuation. And then we get an intrinsic value out of this model of $49.88, which is a 41.59% upside out of this model. The third model that we'll be using is the Graham's device valuation formula. In this model, we'll take a look at the earnings per share that British American Tobacco is generating, the growth rate estimate projected by Wall Street, and the current yield of AAA corporate bonds in relation to the average yield of AAA corporate bonds, always sitting at 4.4. We go by the theory that a company with no growth is always trading at a PE of 7. Looking at all of these metrics, we get a fair value of this model of $25.41, which is a 27.87% downside. The fourth model that we'll be using is the multiple valuation. In this model, we look at similar companies to British American Tobacco, look at their stock price and their earnings per share. This way, we can determine the average PE multiple in the industry, which in this case is sitting at 14.55. Also have to do to get a fair value of this model then is to multiply it by the earnings per share that British American Tobacco is generating, which is $3.63 a share. And this gives us a fair value of this model of $52.82, which is a massive 49.94% upside out of this model. And the last model that we'll be using is the mean reversion theory. In this model, we go by the theory that a company will always trade above or below its mean. And the metrics that we use to determine these are the dividend yield and the PE ratio. In this case, I've imported the dividend yield of the past 5 years, and on average it has been sitting at 6.57%, while the current yield is sitting at 8.10%. This indicates that it's currently undervalued on this metric. Doing the same for the PE ratio, the average PE ratio of the past 5 years has been sitting at 10.54, while the current PE ratio is sitting at 9.71, indicating it's currently overvalued on this metric. And out of this model we get a fair value. Looking at the deviations, we get a fair value of $40.83, which is a 15.9% upside out of this model. If you want access to all of the models that I use in my videos and more, you can check in the description for my Patreon link. Anyways, getting that self-promotion out of the way, let's go look at the final overview of valuation next. Looking at a final overview, we've imported the discounted cash flow, discounted dividend, Graham's valuation, the multiple valuation, and the mean reversion theory price per share, giving us an average of $42.66. Without applying a margin of safety, we would then get an upside of 21.10%, but we have determined a margin of safety earlier, using a standard margin of safety of 25% and deducting it by 5% for the margin growth, leaving us with a 20% margin of safety. Then, applying this margin of safety, we get a fair value of $34.13, and with the current price of $35.23, we see that it's trading very close to fair value at this point, with only a downside of 3.12%. If there's any other companies that you would like to see me cover on this channel, please let me know in the comments, and thanks for watching.